Welcome. This is my first of two videos to help explain the hand of accounting. The hand of accounting was developed so that we could effectively communicate with debits and credits. The students have a lot of trouble dealing with the concept of debit and credit. So the first thing I want to point out is it's predicated on the premise of duality concept. And duality concept we all do every day in our lives. For example, students sacrifice their time, put in the effort in order to complete and successfully complete a course. They get a good grade, they earn a degree, and hopefully a better quality of life. So the debit and credit is predicated on that. With that in mind, the origins, it's a wonderful debate, fascinating discussion, but beyond the scope of this video. So what I'd like you to do is just embrace the simplicity of debit and credit as debit on the left, credit on the right. That's all I want you to do with this. All right, now the accounting hand that we have back behind my shoulder here is one of those ideas that came up while I was teaching my students about the 5 categories of accounts. And that's what we see here, 5 categories, 5 fingers. And what we end up with is the assets as the thumb, liability as the forefinger, owner's equity as the middle finger, revenues as the ring finger, and expenses as pinky. And that's how the hand is set up. There's a lot more in here, but there's a second video that will help explain some of these other things. What I'd like to do is just to explain how we work with the assets and the liabilities, the equity, revenues, expenses, for debits and credits only. If you look across the tops of each of these fingers, there is a little bit of a symbol describing that effect. So for assets, what we see above the thumb is a debit with a plus and a credit with a minus. And I'm going to stop right there and say, if often students want to know why that is the case. Why is it that way? And I would just like to answer because. Now, I offer this as a counter thought. When you first learned English, did you question why there's a period at the end of the sentence? No, you just accept it as a rule. So if you accept it as a rule and move forward, you should be able to get a better understanding of how debits and credits work to effectively communicate business transactions. So the assets, something of value, are increased with debits, you see the DR plus, and are decreased with credits, the CR minus. Now, keeping in mind the accounting equation and the concept of duality, the other side of that equation, asset equaling liability and equities, and owner's equity, must be opposite. So you'll see on the hand that the accounting equation holds where instead of an increase to debit, it's an increase with a credit for liabilities and an increase for owner's equity with a credit. So what we're gaining here is an understanding of how the equation stays balanced by use of debits and credits. Furthermore, revenues are the activities that help to increase our equity. Therefore, they must be similar to the owner's equity category, and that is increases with credits and decreases with debits. Expenses are costs that help generate those revenues. So therefore, they have to be opposite, and that is the debits are the increases and the credits are the decreases. One last point about the way the hand is set up. You'll notice that the middle finger is owner's equity singular possessive, and that is because I'm using a sole proprietorship. Therefore, in the category of owner's equity as described on the hand, what you're seeing is just the capital and the withdrawal. Revenues and expenses are out on their own. Why? Because that's what we're in the business of doing. Which brings up one final point about the hand. You'll notice the dotted line in between the owner's equity category and the revenue category. And you'll notice on the hand that the first 3, assets, liability, and equity, those are your balance sheet. You'll see the words balance sheet down there, dotted line separating them. The other 2 are your revenues and expenses, and as you can see, that's your income statement. And also notice, there's your profit, more revenue than expenses, or there's more expenses than revenue, and that's your loss. Now, the last thing I want to point out about what you're looking at is often students get this backwards, so I'm going to throw an idea at you. The bank statement that you get, you'll notice that your deposits are credits and your withdrawals are debits, opposite of what I just explained. That's because for the bank, your money is a liability. They owe it to you. So when you debit or when you deposit your money, that's increasing their liability. When you withdraw it, it is decreasing. And the last thing is that I'll get into the rest of the hand on the next video. So thank you, and let me know if you have questions.